Do you worry about what you would do in the event of a sudden and unexpected job loss? Or maybe you see what the economy is doing, you're kind of concerned about how you would make it if you were to lose a job or if you were to be laid off. You guys, in this video, I'm going to teach you a proven strategy that can work for you. You don't have to lose your home. You don't have to lose your livelihood. You can ride the storm. But you know me, give me one moment. I'll be right back.
You know I'm a stranger,
As promised, you guys, listen, I've been there before. My husband suffered a job loss, and I'm telling you, it was like, oh my gosh, what are we gonna do? If I had velocity banking back then, I would not have even worried. You guys, there's a sure way to protect yourself in the event of a job loss. And one thing I will say, most times when you go through something like that, within 6 to 8 months, you're typically back employed. And you know what, you guys, there's a way to weather the storm. I'm gonna propose to you velocity banking. I know you've heard all about it. Velocity banking is simple. It's basically working off of a line of credit, using line of credit to pay down your expenses in record time. But let's say you lost your job. You're thinking, how am I gonna pay off my debt? I don't have a job. But I'm gonna ask you to do something. There's a saying, says borrow money now before you're gonna need it. If you borrow when you need it, nobody's gonna give it to you. So I'm gonna propose, if you're a homeowner, look at a home equity line of credit. Home equity line of credit, I go to the credit unions because they typically are cheaper. And on top of that, you guys, they work for the members. They're not stakeholder owned. Well, they are, but you're the owner. So when it comes down to it, they offer more competitive pricing, and they really are more touchable, more consumer friendly. Someone's going to propose, go to your local credit union, take a look at your home. Typically, when it comes to a home equity line of credit, you have to have at least a 600 credit score. They're going to look at those kind of things. And remember, because everything is being squeezed right now, they want to make sure that you're going to be fiscally responsible. So if you're a homeowner, I'm going to propose a home equity line of credit. If you just don't have a home, but you have expenses nonetheless, I'm going to propose credit union as well, a personal line of credit. In this case, look at my chart, you guys. My person here, they have a home equity line of credit because they're homeowners, okay? They have $30,000 that they have as a cushion. What I'm saying is that you go through the process, they'll tell you all the process, and they're going to give you a line of credit. The line of credit is going to sit in your account. You can pick and you can pull as you need it. I'm going to propose, let's say the person lost their job. We see here their expenses, their income was $4,500 a month. Their expenses are $3,700 a month. And look at this, they have a cash flow of $800 a month. Now, you guys, with this budget, we're talking about the mortgage, the insurance, the groceries, and even, yes, fun money. You can still enjoy yourself, even in the event of a job loss. Always remember, do something for yourself, because guess what? This too shall pass. So here we are with this scenario here. What I'm going to do is I'm going to look and say, okay, then you have a $30,000 line of credit. You've lost your job, right? Your expenses per month. We're not going to even look at the cash flow right now. We're going to go strictly off of their expenses, okay? They have $3,700 in expenses every single month. Those have got to be paid, okay? So we look at that. And by the way, there's also savings in here as well. Let's keep all of that. Let's keep all of that going. Let's not take and pull away, rob Peter to pay Paul. Let's keep everything the same. Okay, let's say they have that $30,000 here, right? And you may say, well, Jewel, I'm kind of confused on that. I have $30,000. I have to pay money. I have no job. I know, but that right there is your cushion. That's like what they call your rainy day fund. What we're going to do is that we know that it's at 7.25%. And by the way, if you have a line of credit now, look at your line of credit. When I took out mine, I think I was at 8%, but because of all the interest rate drops, it's now down at a 7.25%. You guys take a look at that. You might see a little bit of a 0.25% savings on your HELOCs and your PLOCs, okay? So here we are, $30,000 at 7.25%. That's gonna cost you basically $181 per month to have this $30,000 taken out, okay? I'm gonna propose that we have that cushion there. We have no job. Our expenses are still there. If we went ahead and just use that, you guys, we're only paying $181. Let's say we suffered a 7-month job loss. Okay, we didn't find a job. It's been 7 months. Our bills are still being paid. We're going to pay that $181 that we owe over here every single month for 7 months, $1,267 just to borrow the $30,000. Okay, and every single month our expenses are going to be $3,700 every single month, right? For 7 months, it's going to calculate to be $25,900. You guys, when you add this plus this, you're coming out to $27,000 that you're going to need to live off of. That $30,000 is going to more than cover it. Let's say, now guess what? You found a job, you're back in shape, you're rocking and you're rolling. But guess what? During that job loss, you didn't suffer anything. Now you may say, well, Jewel, I have to pay it back. Well, sure, you have to pay it back. It's okay. But notice something here. You didn't go without eating. You didn't go without paying your mortgage. You didn't go without paying your electric, gas, streaming services, all those kind of things. And I will say this, if you have things like streaming, you maybe can go without for a couple months, turn it off if you need to. It's okay. But if you don't have to turn it off if you don't want to, you have your line of credit that's going to be your cushion. It's going to hold you for at least 7 months. As I said, you guys, most folks, when they go through a job loss, it's between 6 to 8 months, okay? So by the time you're at 7-month mark, the goal is that you'd have a job. But as I said before, you haven't gone without anything. And before I continue, I'm going to ask you to do something. If you found value in this video, share with other people. You know, homeowners that have a home, like I said before, get money because when you need it, you're not going to be able to get it. So get it now. Take advantage of it now. Because when you need it, it's going to be hard to borrow it. So let's go ahead and put a cushion in place right now. If you never had to use the money, great, no problem. You don't have to use it at all. But just knowing you have $30,000 sitting in an account that you can pull from, that you don't have to go without, you guys, that is a really surefire way to prepare yourself for success. And I'd much rather have a 7.25% interest rate as opposed to a 30% living off of a credit card. This beats all of that. And as I said before, typically if you look at stats, job losses that last extended losses, they're between 6 to 8 months. This right here is a 7th-month term. It's going to hold you. So I'm going to propose home equity line of credit. If you're a homeowner, get it now. Call your credit union. Get that put in place. That's your safety blanket. Or personal line of credit. You know, go for the personal line of credit. The good thing about the personal line of credit is that, guess what? There's no collateral required. But interest rate is going to get higher. It's going to be higher. So because there's no collateral required. I'm also going to say this to you. When you think about it, once you get back into the job market, let's go ahead and work on paying this down. And remember, because you have this $800 cash flow, let's just say in a perfect world that maybe you got a better job, maybe you now have $1,000 cash flow. Use that cash flow to run down that debt and get rid of that $30,000 that you owe. Remember, whenever you have a line of credit, as you pay it down, your payment per month goes down. So that 181 will be 177, 167, and you want to inject all the extra that you have, the $800 cash flow, $1,000 possibly if you have more, into the principal. You're going to see that debt eliminated in no time. But anyway, I hope I brought a little bit of hope, a little bit of direction, a little bit of clarity about if you suffer a job loss, it's going to be okay. You're going to recover. I'm proof you do recover. But let's put this in place, because if you have that HELOC or that PLOC in place, when you need it, rainy day fund, you can go for it and it's there. As I said, we're still living our life. We're still going on. We're still looking for a job, but we're not in an anxiety, type situation. We're just so worried about months and months of not having a job and thinking about all those things we have to do because we don't have a job. So until the next time, until the next video, I'm Jewel, your financial freedom friend. I'm here until you win. Bye-bye.